Hey friends, have you ever wondered how you can pay off your mortgage faster? Or maybe you like to help your kids get into the real estate market? Or better yet, retire with some passive income? Well, you're in the right place. Welcome to the Sylvia Ho Mortgage Podcast. My name is Sylvia. I'm here to teach you how to achieve your goals simply by owning just one more property. Hey everyone, welcome to the Jump Podcast. My name is Sylvia Ho and I'm going to be your host today. Today, we're going to hear from Aviva Abraham. And Aviva Abraham is an insurance agent. And in today's podcast, we're going to talk about the differences between the different types of insurance. But what she really talks about is about how us as clients are in the JUMP program and how we're trying to build wealth through real estate so that we could eventually pass it down to the next generation, to our kids, and how to protect that plan and how to protect that asset. So let's listen in. Thank you very much, Aviva, for joining us today. We started chatting. We were talking about, life insurance and the importance of life insurance and how to protect your real estate investment. As most of you guys know, I promote the JUMP program. The JUMP program is all about buying one more property and building wealth through real estate, basically copying what the wealthy people do, the rich people do, right? The rich people never have dead equity. Right? They always have debt against an appreciating asset. And right now we have Aviva here. She's going to talk to us about what life insurance is all about, right? Aviva's giving me 5 questions here, and we're going to go through these questions, a little bit of a different format, but that's what we're going to do today. So Aviva, welcome. Thank you very much for coming on to the podcast today.
Thank you so much for having me. And I love your JUMP program. It definitely ties in with a lot of things that I discuss with clients as well, helping them protect their assets, helping them pass it on to their family so that they don't have to lose whatever they worked so hard to build to taxes whenever they pass.
Mm-hmm. Yeah, absolutely. Passing is such a difficult thing to think about. People just don't want to think about it, right? But, we go through so much effort to set up this whole JUMP program. And if you're not protected at the back end, then you've done everything for nothing, right? Like I hate for the government to get more money than they really should. So Aviva, let's go through the 5 questions that you gave us. So how does life insurance protect our real estate investment? So talk to us about that.
So in the early years, Sylvia, when the mortgage is high, equity investment is low, you've got debt. If something happens to somebody, again, like you were saying, you want to protect the strategy that you're helping your clients implement, but it takes time. So if something happened to you or your family and they're left with a lot of debt, they may have to sell that property in order to pay. There's that final tax return that people have to file on the death of a family member. So on that death of a family member, it's as if the asset was sold and then there are taxes that are due. Having a life insurance policy that protects the debt so that people can keep that asset and not have to sell it. They can pay the estate taxes. They can pay down the mortgage. Really, life insurance provides you with cash so that your family can hold on to that asset that you bought. They can pay off part of the mortgage. They can use it whatever they want. They can even use it to buy a new property if they want. So they have the flexibility there to use that money in whatever way they need and want.
Yeah, so it's all about protecting your investment, right? The next question you have here is, my mortgage is paid off. No debt. I don't have to worry about any debt. So why do I need insurance for my real estate property? Like, how does that even make sense?
Right. So that's a great point to reach, actually. And that's what you're helping clients with, right? So in the early years, you're protecting the debt. But once that debt is paid off, like I was saying before, if somebody were to die and they're holding that real estate property, their family then has to file a final tax return that says, these are the assets that I owned. And it's as if it's sold, CRA wants their share of it. Even though there's no debt on the property, there's going to be capital gains. So what did you buy it at? What is it worth now? And there are taxes on the capital gains. And those taxes will come due and the family will have to pay for it. So how will they have the money to pay those capital gains taxes? That's where the life insurance comes in.
Okay, so help me understand this. Let me run through a scenario with you. So let's just say the house is worth $1 million.
there's no mortgage on it. They originally bought it for $500,000. Okay. And it's doubled in value. It's worth $1 million, no mortgage on it. Let's just say it's under one person's name, right? Upon death, that property is technically sold to, let's just say the husband died, to the wife, right?
So when there is a couple, there is a rollover.
Okay.
So it's really if somebody is single, not married, divorced at that point in time, because if there's a couple, and also it depends how their real estate is held, if it's held personally or in a trust, there could be other scenarios. But ultimately, whether you're single or a couple, at some point in time, that real estate will show up on a final tax return.
Okay. So either you dip into the equity to pay that bill, or you use life insurance to pay that final bill upon death.
Exactly. So if you have no mortgage, you can't draw on that. If you have no line of credit or mortgage existing, then what's going to happen? The kids are going to have to take out a mortgage on the property. It gets very complicated and messy. The easiest way, and actually the most cost effective, the cheapest way to do this is through insurance, and it provides cash in a very timely way.
Yeah, I was just thinking, like, as a real estate investment property, you never want to have a property that's free and clear and just sitting there anyways, right? If that's a real estate investment property, like, we want to draw down on it again, use that money, go buy another property.
Yes, that's true. What I find as well is that things happen in life that you just don't expect. And so it could be that your client was about to reach out to you and say, let's refinance, let's do this. We paid off the mortgage, and then life happens. So that's where it's good to know that you have the life insurance set up. It could be they were about to invest, even though I understand that's your strategy, is not to have debt equity. But that being said, we never know what happens. That's also why I said before, you can use the life insurance for anything. So it doesn't have to be to pay off estate tax. It could be for something else. It could be the children will then use that money to invest in a new property.
Okay. So next question I have for you is, a lot of times I talk to clients and I ask them, do you have life insurance in place? You are the main bread earner. And they're like, no, I have life insurance through work. Talk to me a little bit more about that, because my understanding is the work life insurance is really not enough to cover like the funeral costs. Let's just say, I don't know, but why don't you clarify that? I always tell people, speak to an independent insurance agent to get the proper advice, because the life insurance through work, in my opinion, I don't think it's enough at all.
Really, really important topic. And yes, there is a lot of confusion when it comes to that, whether it's group benefits, life insurance, or bank mortgage insurance. They really are not as well served with that. So as you mentioned, when it comes to life insurance through group benefits, even if it's one-time salary, that is not enough, especially in the GTA, especially with home prices the way they are today. That's not enough to cover off a mortgage debt, to cover off a real estate property. That's why individual insurance would be a better option. And the group benefits life insurance is really designed to help the family cope with not having the income of that person if they die. It doesn't address what other assets they have, what other debt they have, and to pay that off. And it's never at the levels that people need today. It's more a basic level to tide people over for 6 months to a year. When it comes to bank mortgage insurance, if people say I signed off on bank mortgage insurance when I took my property, that's where there's certain ways that bank mortgage insurance serves the banks and it's owned by the banks. It's not owned by you. And so there are actually quite a few ways that bank mortgage insurance is not as good for you as an individually owned life insurance policy. I actually wrote a blog on that. There are about 5 or 6 different reasons why a personal life insurance policy is better for you. I can share that with your network, definitely, if anybody's interested. It's just good to know that a personal life insurance policy is better. And if you're relatively healthy, rates are actually better on a personal policy than on some of these other types of life insurance.
Okay, let's back up for 2 seconds here, because I know insurance gets very confusing. Just to clarify to the audience here, we are not talking about auto or house insurance here. We are talking about life insurance. And there are 3 different types of life insurance. And Aviva, correct me if I'm wrong. So there's insurance that you can get through work. And typically it's 1 to 1.5 times your salary, right? If they even offer it, right? So that's life insurance through work. Most people have that if they are full-time salaried individuals. But the bad thing about the life insurance through work is that it doesn't necessarily protect the needs that you may have personally, right? And then the second type of life insurance that you just mentioned right now is a bank life insurance, mortgage life insurance. So by law, as a mortgage agent, I have to offer mortgage life insurance to all of my clients. But what I tell my clients is this is just a stopgap between what you actually have and what you actually need, and to speak to an insurance agent like yourself. And with the mortgage life insurance, it's on a decreasing balance, so on and so forth. So there's that whole spiel about the mortgage life insurance. And then the third type of life insurance that you are talking about that you're saying is the best one for you is the personal life insurance policy, right? And then the personal life insurance policy is where an individual like yourself who specializes in insurance says, okay, here are your needs. This is how much debt you have. This is how much income you have. You have 20 kids. So you need to, make sure all 20 kids are protected, right? In the case of you being the main breadwinner, right? And having the proper life insurance in place, right? So the next question I have for you is, why do people not do personal life insurance? Like for me, I understand the importance of it, right? Owning property, I'm going to end up paying a lot of income taxes, and everything I did was for nothing. Like I want to pass money down to my kids. I want to pass property down to my kids. So for me, life insurance, super, super, super important. Why do people not look at life insurance? Is it because of cost? Is it because they're lazy? What is it? Like what do you hear all the time?
What I find is people don't really want to deal with it. It's not a pleasant topic, thinking about when you die, thinking about not being there. But added to that, when it comes to whether it's the life insurance through your group benefits that's given to you, they didn't have to do anything for it. They don't have to take the time, effort, think about it. They're just given that if they're lucky enough to have it through a job. And when it comes to bank mortgage insurance, you're just signing a piece of paper. You don't have to do any extra work for that. When it comes to a personal life insurance policy, you actually have to answer medical questions and go through a process. You don't have an insurance advisor, find somebody that you're comfortable or you want to deal with. You have to actually set up a time for a meeting. It takes time and effort. You have to go through an application. You may have to do blood work. So it does take time and effort. And again, it's not the most pleasant thing. So a lot of people push it off. It's not that they don't think it's important per se. Most people think, yeah, it'd be great to have it. But between the time and effort and the additional cost to do that, a lot of people just procrastinate and don't take care of it.
Yeah. But what's going to be worse is when the person passes, and then you have to deal with the estate, and then everyone's mourning and crying and upset and just making those kind of decisions when you're emotionally not sound, right?
Right. And so a lot of my clients actually, that's what they focus on. If something happened to me, I want to know my family is taken care of. Everybody wants that. But it's actually taking those steps, and life is so busy these days. So what we try to do is make it as simple as possible. And COVID sort of helped with that. Don't have to do medicals as much anymore. And so the process for applying for life insurance is faster and easier than it was before. So it's just good to know that, because making things simpler for people these days really, really helps in getting things accomplished.
Oh, yeah, absolutely. I remember when I was getting my life insurance, it took a good month, month and a half to even come up with a decision. Now, are you telling me that life insurance, like to get an individual life insurance policy, it's much easier? Like, how many hours would a client have to put in? Like, let's just say it's like, I'm brand new. I want to get life insurance, Aviva. We set up a call, we chat. From that period, how many hours or how much time do I have to put in? And do I have to provide any kind of documents? Like, how does that all work? Or is it like a 1 hour conversation? You meet, you do medical for 1 hour, and then you sign?
There are 2 types. So first of all, if you're healthy, let's assume healthy, no issues on the younger end, let's say up to age 50, 55, right? And it's really simple. Like we would talk, let's say 1 or 2 meetings up to an hour just to understand what it is you need and then make recommendations. Once you're ready to move forward, an application can take, there are actually 2, 3 companies that if you respond to the medical questions, no issues, I'm healthy, I'm fine, no outstanding tests, you can get approved within a few days. But that application itself might take 45 minutes to complete, but then you can potentially get approved within a week as long as your application was clean, no medical issues. So it really, really is a lot faster than it used to be. You don't have to do the blood work. You don't have to go through all the other hoops. If somebody is not healthy, it will take longer. If they've got health issues, serious health issues, if they have any outstanding tests, then that's something that it will take maybe an extra time. So an extra hour to meet with a nurse to do blood work. They may go to your doctor for a doctor's report to answer some questions. And it might take, like you were saying, a month. I have some clients that it would take 8 weeks till they get all the answers that they need.
I like that recap. So you're healthy, you're young, under the age of 55, you're saying that at most 2 hours, right? Having a conversation with you, understand their needs, and then you explain what the needs are, and then filling out an application. And then that's for the healthy individuals. If there's individuals with, say, some medical issues in the past, then it may take a little bit longer. So now that we're talking about medical issues, is it an automatic decline if someone has a medical issue?
It depends on the issue. Again, if it's something like somebody had cancer, it's a lot harder to get them insurance. There are a few companies that will offer limited coverage, so you wouldn't be able to get 2 million or 5 million per se of life insurance, but you could get a lower amount and at slightly higher rates of what a healthy person would get. If it's something like diabetes, which a lot of people have these days, or chronic pain, a chronic condition, yes, it's still possible to get insurance. Again, the insurance company may ask you to pay a little bit more, but it's still financially worthwhile in terms of the taxes we were discussing for them to get the life insurance as opposed to not having any. And that's something that I discuss with clients as well. If for some reason their application comes back and the insurance company says, oh, we're asking you to pay extra because we deem you as a higher risk, we think you may not live as long as other people, then if it's really not financially worthwhile, I'll tell you. If it doesn't make sense, I'll tell you.
Being an insurance advisor, I'm assuming like you have different quote unquote, like for me, I'm a mortgage agent, right? So I have different lenders that I can go to, right? So I have lenders that specializes in self-employed. I have lenders that specialize in high net worth individuals, right? So for yourself as an insurance agent, do you have like different lenders that specialize in different things? And you're like, okay, with this medical history, our best bet is to go over here.
Yes, I work with all the top companies in Canada and then some smaller niche providers. Like I was saying, if somebody is hard to insure, there are some companies that are specifically designed to help those people who have health issues and provide them with insurance because it is so important for everybody to be covered if at all possible. So there are some companies that will take on that added risk and are specifically geared towards those with health issues. Again, if somebody is a female in their 40s, rates will be very different than a male in his 50s. So going to the right company with better rates, and yes, if somebody's got a minor issue, one company might be more lenient on heart issues, another company might be more lenient on someone who had cancer. So understanding what company to go with and how to get the best rates and the best structure, that is part of what I do.
Yeah, because the worst thing is that, you know, people are always scared of getting declined, right? So it's just like, okay, but you're telling me there are options out there.
Right. As long as people are aware of their health issues, some people don't realize what could be an issue. And that's also part of the discussion we have.
So last question here is, what are the top 3 things we should know if we're applying for insurance today? What are the top 3 things? Like if we're going to leave with anything, what are the top 3 things that we should know?
So first, we mentioned it already. It's easier than ever before to apply for insurance. For some levels of coverage, you don't need to do medicals. And for younger ages, you don't need to do medicals. The application process has really been simplified. We used to have to meet in person, fill out a paper application. Now, every company has digital applications, which make it easier. As long as tech is working, then it is easier. But it is easier than ever to apply for insurance. Secondly, the best time to apply is right now, because insurance is based on age and health. And most of us are never healthier and we're never younger than we are today. So if it's something that you have pushed off, like we were talking before about people procrastinating, the best time to move forward on it is right now when you're healthy and when you don't have issues. Thirdly, just be aware and I'm sure a lot of people there are online options these days since everything went digital. You can get your own insurance just Googling life insurance, and you can get your own policy without having to deal with or talking to an advisor. But I strongly recommend against that. I believe very strongly in specializing, like speaking to someone like you when you're going for a mortgage and not just, getting whatever is offered online, because specialists know the ins and outs of what is possible, what the advantages are, what your options are. And we're talking about hundreds of thousands of dollars. So literally, not only can it save you money by dealing with a specialist, but finding the right company, the right setup, getting it set up in the right way so that your family is properly looked after. So speaking to a licensed insurance advisor is the best way, and not just relying on the internet for that.
I'm not even sure why people would do life insurance just by online Googling. Like to me, that it's a big decision, right? It's about life and death, and it's about protecting your family assets. And you just want to do that online. This is not online shopping. It's not like buying a pair of jeans at the Gap or something like that, right? Yeah. Those are really good tips. I love the fact that, it's easy to apply now, because I know when we were doing it, it was like meeting after meeting after meeting. Now it's been a while since we've applied for life insurance, but we review it on an annual basis. So I think that's another thing that's very important, is to review your needs, right? And then applying for it right now. It's having that, have a hard conversation. Right now is January. It's maybe quote unquote a slower month. Maybe things are just starting to get rolling. It's a good time to have that chat. But at the end, my belief is that life insurance is part of the package of, taking care of your family. It's taking care of your entire family, and part of like the saving part as well, right? Is taking care of the death part as well. Anything you want to add in here before we end off?
We covered a lot of different aspects of both insurance and protecting your real estate investment. I think it ties in. There are a lot of reasons why this was an important topic for your Jump clients. And thanks so much for the opportunity.
Thank you so much for coming, Aviva, onto the podcast and just explaining the importance of, having proper life insurance in place. For my listeners here, Jump is all about owning just one more property and building wealth through real estate, building these dreams and making these dreams come to realization, paying off your mortgage in 10 to 15 years, helping with your kids, but not only with your kids' education, but also helping them get into the real estate market in the future. Right now, I'm talking about RESPs versus, real estate, and which one ends up on top. And of course, I'm a big believer in real estate, and I believe that real estate is a way to help your kids, not only for their education, but also for future real estate investments. And then the last thing about the Jump program is all about having retirement, passive retirement income. So thank you very much, Aviva. This has been great. Now, what's the best way to get in touch with you?
So I can definitely provide my email, phone number. I'm also on LinkedIn. And so, pretty active there. And those are the 3 best ways, really.
Okay, beautiful. Thank you so much, Aviva. Take care.
Hey, everyone, we just heard from Aviva, and wow, this is absolutely eye-opening. The amount of taxes that we have to pay to the government upon our death. And if we have an asset, we're going to be paying taxes on it. We're going to be paying capital gains on it, and how life insurance is a way to take care of your family after your death and the importance of it. So really appreciate what Aviva was sharing with us today. So guys, for those who are in the JUMP program and have bought another property to build wealth through real estate and to take care of the next generation and to pass wealth to the next generation, it's very, very important that we have proper life insurance in place to pay that final bill upon our death. You want to learn more about the JUMP program, please book an appointment with me through my website at sylviaho.ca. Thanks so much for listening. Take care. Hey friends, thanks so much for listening to the Sylvia Ho Mortgage Podcast. We'll catch you on the next episode. You want to learn more about the JUMP program, please connect with me at sylviaho.ca. Love to hear from you. All it takes is 15 minutes for us to chat to see if this will work for you. Thanks, guys.